Welcome back to another tuition video. So for this one, I'm going to be basically talking about following the narrative and kind of explain what I mean when I say follow Price's story. This is also going to be incorporating everything you've learned thus far, and hopefully it will give you better insight into like how you should realistically be coming to the charts and finding your setups, for example. So in this case, this is Euro GBP, and if we just go to the daily, what we can see is that we're kind of in a strong uptrend. This was obviously quite corrective. We came down. This obviously here mitigated out of something in the past, and most recently we had a break of structure like so to the upside with high momentum, and then we had a corrective retracement to the downside. So now this retracement here, we can see that we had an inefficiency right about here, which we actually tapped on the daily, and literally we tapped it to the T. That is perfect. So what we do is we go down to our lower time frame, 16-hour. The inefficiency is still here. 12-hour inefficiency is still there. 8-hour still there. 4-hour. Okay. Now notice this. On the daily, our inefficiency would have been what's this? 65 pips, right? Now let's say for example we didn't see this happen yet. We're still waiting for this to come into our daily inefficiency. Working your way down the time frames, you'd be able to identify things like this. You're like, okay, cool. The 50% of my inefficiency on the daily also lines up with this 4-hour inefficiency here. So when people ask me, oh, how do I know what inefficiency to pick? How do I know this or that and the other? You want your confluence across different time frames to line up in one kind of general area. And this obviously here lined up with this structure in the past. Obviously, you kind of want it to be more pinpoint, but general structure was lined up with on the inefficiency. And let's just play this out and see what happened. So we came down, tapped it perfectly, and not only did we tap the daily, but we actually tapped the 4-hour even better. So let me just make this a bit bigger for you to see. You would have had a potential reactive zone between the daily inefficiency and the 4-hour inefficiency. That is, I mean, that's just insane. Look at this accuracy. You literally went from a 60 pip POI to a 2 pip POI. Madness. Anyways, so let's drop down to our lower time frame and try identify an entry. Now, obviously here we had this happened at what? This happened during like midday. So if we just play this out, came up, right? If we go to like, for example, the 5-minute, probably identify some sort of a break of structure within here. We broke this here, we broke this here. We came for like obviously these small levels of structures within that price leg. Let me just play this out now. Okay, now let's pause this. So upon the tap, right? Here's what happened. This was around post New York session, so obviously there was low volatility in the market. We had a couple. This would have been this wouldn't have been that many pips, but then obviously we came back up and quite consolidating, right? So what we had was equal highs created during the Asian session, and we also had the Asian low printed here. So what you kind of want to look for is, no, sorry, what time is this? I think this is, yeah, sorry. You had the Asian low printed here. So what you saw is at 8 a.m., right about here. Let me just mark this out. 8 a.m., bang, here. 8 a.m., we had a, let me just, London false move, or let's just call it London Open for now, not confuse you. So we had our London Open, and what did we do? We dove and we took out the Asian low. Bang. Right? So now what we do is we know at 8 a.m. we're going to have some sort of fake move to seek nearby liquidity. So what happened was this. Price came up, broke this level of structure here. We also broke, for example, this level of structure here. These are all BOSs, right? Bang, BOS there. You broke this level here. And we broke this level pretty strongly. And we just rocketed to the upside. So now, just to clarify, we've previously touched on, sorry, let me just track back a little bit. So we've obviously touched on inefficiencies here. We touched on time frame confluence. Also, from the inefficiency to the high, it took 18 bars. And from the high to the fulfillment, took 66 bars. So effort is clearly to the downside, momentum to the upside, right? So let's continue. So that's we got momentum confluence there as well. We got London 8 a.m. move to the downside to purge liquidity. So we know we're 9 times out of 10 going to have a reversal to the upside, right? You don't need to catch this move here. You want to wait for the break of structure to confirm your move to the upside. So then what you do is you wait for price to, let's go to the 2 minute, wait for price to return to some sort of level where you're happy taking a trade, which would have been, for example, here. Could have taken this trade here, you would have had a nice, let's give this some leeway, 3 pip stop loss, you would have been touched. And what happened here? We ran to the upside. We came back down, bang. Again, inefficiency fill. Could have taken a position here now. Now keep in mind, yeah, this is during 11 a.m. This is 11 a.m. This is where you have your prime time volatility. Look, in this case, you don't want to have your stop loss right below the candle here, simply because 0.4 pip stop, like you'll probably get stopped out from just swap fees. I mean, sorry, just spreads. Give the trade some room to breathe. With this level of accuracy, you don't have to be that extremely precise. Give it some space to breathe. 2.5, even like don't be greedy. Let's say even 3 pips, right? Bang. Actually, you know what? It's a bit too much leeway. 2.5 pips, tap nicely, then we run to the upside. But look here, what we had, again, break of structure. Simply just follow the narrative. Look, inefficiency fill here. All of this price action is filled in. What we had was discounted inefficiency. We came, tapped it, ran to the upside. And you should be happy taking this. It's only a 2.5 pip stop. And your stop here would have also accounted for if we came and filled this inefficiency here anyways. So you would have been alright. Sorry, my phone's just popping off. So what we had here, another inefficiency here, right? So what you obviously sorry. Also, I'm just jumping back and forth here. What you also would have done is your little 10 pip rule. So this would have came. Look at that. Perfectly, 10 pips in, it would have been the exact same trade. Bang, 2.5. You would have bagged 4% just from your first trade. And if I haven't really touched on this before, it's just two trades, 1% risk each, and at 10%, at 10 pips, you take the first trade. And in this case, you would have bagged 4%, and then you would have had your second trade still running. And what we had here, we came back down. I think we tapped. No, sorry. Here we tapped the 50. Here, I believe we tapped the 50. But regardless, this general region here, I'd be happy to buy from, because this entire box here is only what, 2 pips. So what we had, dive down, bang, shot back up. You could have been, you know what, I'm not even going to be accurate on this one. Let's put it anywhere here, boom. Stop loss, let's just say below this low, 3.5, nice, oh, bang, nice number there. There you go. So this is entry number 1. If you didn't catch this, should have caught this. If you didn't catch this, should have caught this. Now, what we had after this, boom, to the upside. Right? So now we've covered higher time frame inefficiency, confluence. We have, this is obviously these BOSs here. This is corporation. We have corporation to the upside here. If we just wicked it and dropped violently, then that's no corporation, and I wouldn't really look to, what's it called? I wouldn't really look to be long in this. But look here, look how we literally just dropped, purged, and look at this. Look at the bar. Look at the bar after the purge. Bang, straight back to the upside, and we literally moved away. This here shows no downside corporation. So let me just bang, no corporation. Yeah. Who is? Oh, give me a second. Let me put my phone on silent. Right. So, anyways, those are 2 potential trades you could have taken. Yeah. So let me just line this out now as well. Bang. Now keep in mind, look how this is following the narrative. Again, inefficiency fill, move to the upside. Inefficiency fill, move to the upside. We have another inefficient price action. Bang, we tapped it, move to the upside. Now what we have is this. We've got this inefficiency that we could potentially look to trade from. So let's see how this plays out now. Oh, that's annoying me. There you go. Let's see how this plays out now. We come back down into discounted market, tap, bang, again, same thing. Boom. Again with the 3.5 pip. Let's just give this some more room to breathe. 4 pip stop. Now keep in mind, yeah, all these trades, even if you just take it to the external range liquidity, which is the high, yeah, 4%. Light work. You could have caught any of these and just let the whole thing run. Let's say you managed to get this one. Yeah, not even that one. Let's say you managed to get this one here. Stop loss would have been, let's just say 2.5. Up to this external range liquidity, you'd have bagged 10%. You could have took that one trade and been done for the week. And I just want to show you guys something quick as well. I know I'm just all over the place and I keep going on crazy tangents, but I just want to show you how hard it is for you to normally make 10%, right? So usual retail traders have a 30 pip stop, right? So for them to make 10%, it has to get, 300 pips. They'd have to catch, damn, where's our take profit? They'd have to catch, it's not even, it's like this, it makes this look so small. Just look. You'd have to catch this size move to get the same reward you would get here. Now let's just say theoretically you were to catch the same pips, yeah? You were to catch 300. That's not even 300, that's 282. As for example, you were to catch, you'd have your profit at the same level. Here you'd make 10%. Here you'd make 70.8. I think sometimes we take for granted how easy, or like we're like, oh yeah, 10%, 4%, but realistically, look how hard it is for people to normally make these percentage returns. Anyways, I digress. So what we had here was inefficiency fill here. Let me delete this. Inefficiency fill here. Again, an inefficiency fill. So what we're left with, if we're following Price's narrative, let's have one more candle print to confirm if this is an SC or not. See, I wouldn't really like, I would have preferred this to be a bullish candle. But if we go to the 3 minute, let's play this out. 1 minute. Okay, that looks nice. 3 bullish candles to the upside. Let's go to the 2 minute. Okay. Interesting. Just give me 1 second. I just need to get this. Alright. I just want to point something out as well. Obviously, all of these have been inefficiencies, so if we just oh, that's crazy. 16. So that we had an inefficiency here, here, oh, here, and we had an inefficiency here. However, this candle here could be classed as an SC. I thought it was this one, but it's this one. I would class this down candle before this up candle a sponsored candle, because look at the strong reaction we had after that, right? So if we just delete this, this would have been the perfect trade to take, because not only did this line up with the inefficiency fill, but the open of the candle was perfectly tapped. And you would have had your inefficiency fill here. That's 2 reasons why you should take this trade within this, what, 0.5 pip region. That is insane accuracy. So here we had an inefficiency and a sponsored candle. Bang. Now, let's continue. What actually ended up happening was we continued onwards, higher and higher and higher. Bang, drop, right? Let's just go back a second prior to this drop, right? So if we're following Price's narrative, we had an SC here, we came up, came back down, probably mitigate out of something on the 1 minute or something like that. I'm not gonna fixate on trying to find that. Came back up here, back down, tap probably the 50, no, tap the open of this candle here. Again, move to the upside, and then again drop and move to the upside. Notice how price action within this entire region here is pretty filled in, except for this inefficiency we had printed. This is following the narrative. Notice how all the trains are in some way combined. You see how this is following the story. We go up, down, up, down, and then we have the first inefficiency printed, which would have been the footprint left behind for us to identify a reason to enter. And I'm not expecting you guys to catch this kind of move. I'm actually expecting you to catch more of this type of move because this makes more logical sense, right? But obviously, in the future, I hope you guys do manage to catch this type of move, what we actually ended up seeing. And this just goes to show how well inefficiencies work. What we actually ended up seeing was a crazy drop. We tapped that inefficiency and we returned back upwards. We didn't even close below the candle of the inefficiency. So let's just say you did decide to take this. Would have had a give this some leeway, 2.5 pips. Let's see how this played out. Bang, take profit, 15%. And that's 15% in the space of, that's 15% in 40 minutes, 38 minutes. You could have taken this one trade or pretty much any of these and had been done for the week. So what we have, play this. So let me exit this now. So what we have now, if we're following the narrative, is go to the 1 minute. I'm just going to give you guys a second to just take a look at this and kind of think what we could potentially possibly come back to next. It's going to give you a second just to take a thought. Right. This might work, it might not work, but what I personally like is for price to come back within this candle here. Now we don't have, I call this a blind candle because I'm pretty sure most of you already know about it, but a blind candle is essentially, it's called a blind candle because you can't see anything lower than a 1 minute, and this is technically our sponsored candle because this is a candle that tapped the inefficiency, and then after that we had bullish candles to the upside. So I'd personally like this low to be taken, and I'd like to come down to this inefficiency here, hit it, bang, follow the narrative, have my clean break of structure, identify a new lower time frame POI, hit that lower time frame POI, and take this trade. This is how you follow the narrative. So when you're asking me, oh, this inefficiency or that inefficiency, ask yourself, does this inefficiency follow Price's narrative? Does this make sense in terms of Price's story? And to be honest, that's the best way you're going to find your trade setups. Like this gave you what, 1, 2, 3, 4, 5 entries within just the whole trading day. So when you're just sitting there thinking there's no opportunities, you might just need to understand Price's story a little bit better. But besides that, I hope all of that made sense. I know I went off on a few tangents, but it was just me trying to really drill this inside your guys' head. If you guys got any questions, just feel free to drop in the Discord chat, ask me in private, I don't really mind. But besides that, I'll catch you guys on the next one.